This is cool.
Hey, so we're live, hopefully here on Facebook. I am with Todd Galde. He is a lender with Commerce Home
Yep.
Mortage.
Yep, that's right.
Okay, and Todd has been in the business for 20 years.
Yep.
His dad was a lender and an underwriter at the kitchen table of his home back in
Yes.
the 70s, the late 70s. So
Yep.
Todd has grown up in the business. So thanks, Todd, for being here.
Yeah, absolutely. This is fun. I'm excited.
Yeah, I'm
Yeah.
thinking that there's lots of people who need some information regarding mortgages and just what's going on in this market here. I want to look on Facebook. I can't. Yeah, I think we're live. Okay, and so can you tell me what does it mean that you're a direct lender? First of all.
Yep, great question. So direct lender is a mortgage banker who is direct to Fannie Mae and Freddie Mac. That's the simplest way to put it. So we have direct access. There's no end around. Fannie Mae and Freddie Mac have minimum requirements for FICO score, maximum requirements for debt to income ratio and all that. Many banks put what we call overlays on top of those. And so, for example, if let's say Fannie Mae's credit requirement is 620, right? We will be 620 as well. Whereas maybe a bigger bank, especially in light of what we're going through right now with the COVID-19 epidemic and the economic downturn, many lenders are increasing their minimum requirements for FICO scores above the Fannie Mae and Freddie Mac requirements. We don't do that. So we follow their guidelines. And so that's the best explanation for being direct.
Okay, great.
Yeah.
So, we hear about forbearance,
Mhm.
people maybe skipping a loan payment even. I mean, there's just like so much out there that's probably not true or
Yep.
correct information. And so can you help us understand what's going on at this time? Can people skip a payment? What
Yeah.
does it all mean?
Yeah, I love this topic because I hate this topic. So, yeah, early April, obviously the CARES Act was implemented by the federal government. And a portion of the CARES Act was the implementation of mortgage forbearance, or the allowance of mortgage forbearance with mortgages that are held by Fannie Mae, Freddie Mac, FHA, USDA, or VA. So there you have the three government entities, right? And then you have the two, what we call government-sponsored enterprises, Fannie Mae and Freddie Mac. So those five entities, if you will, the government has given the authorization for borrowers whose mortgage is held by one of those five to miss a payment, to have it forbeared, basically. And this is where, by the way, I just read yesterday that the statistics were now over 2 million people have taken advantage of this forbearance offering. And it's going to be a lot more than that. But I think 2 million represents 4% of all mortgages. The numbers are staggering. And what I have an issue with is the simplicity of it, right? Meaning, you missed your mortgage payment, right? And everything's going to be okay. Now, I get it for people that need to miss their mortgage payment. If you are out of work because of this terrible time, and God forbid there's two working spouses that are out of work, and you have to decide between making your mortgage payment and feeding your children, miss your mortgage payment, right? There's no question, right? And so for those people that are affected significantly by the downturn, you got to take advantage of it, right? You don't have any option. But I think there's a lot of people that probably could make their payment and they're not, right? Not understanding the implications.
There we go. So that's
Yes.
what I want to know.
Yes. So there's a couple things. So the immediate implications are, when will I have to make these payments, right? When will I have to pay them back, right? There's no such thing as free money. You're not getting to skip payments and not have to pay it back. The first requirement that the lender will impose on the borrower is payment after the forbearance period. So let's say, and they're giving, by the way, people 180 days, which is 6 months. Yeah, I think it was 180 days or 360s, which is a year, right? So 12 missed payments. But the very first requirement that the lender will say is you have to pay us in full the missed payments. So let's say you only forbear 3 months, right, or 4 months before you get gainfully employed again, and you say, okay, we're done forbearing. They're going to say you need to pay us 4 months worth of mortgage payments right now, right?
Yeah.
And then you're gonna say, what are you talking about? We can't, right? And it's all in writing. If you just got to read real close, and ask the right questions on the phone with the servicer. If you can't make it, if you physically can't, then they will try to. The second way is to spread it out over a certain period of time, right? And so let's say you've missed 3 payments, totaling $6,000. They'll take that 6,000 and divide it over a certain period of time. I'm throwing numbers out there. I don't know exactly what, say 24 months, right? And they'll tack on 6,000 divided by 24, right, to your mortgage payment going forward, right? So, okay, I didn't have to pay, 3 months right away, but now my mortgage payment is that much higher, right, for the next 24 months. That's not good. The third option, which I don't think every lender is giving, is moving the payments all the way to the back of the mortgage, meaning it sits as unpaid principal and unpaid interest. So if you go to refinance in the next year or 2 or 3, which we'll talk about in a little bit because this affects your ability to refinance, then you have to pay it, right? But here's the challenge though. The servicer, the one that you're calling, right, to say, I want to take advantage of forbearance, are not the decision makers. It's actually the note holders. So the entities that are holding the note, right, are deciding whether or not to give you option 1, option 2, or option 3.
Right.
So you're rolling the dice, right, by doing this, and then not knowing what it's going to look like in the next 3, 6, 9 months.
Yeah.
Right? So that's the first implication, the obvious one, right? What isn't being publicized at all is the credit implications, and they make a big bold statement in all the literature that I've read. They're not going to be reporting negative, a negative mark to people's credit, right? The problem is, and I've spoken to credit reporting agencies about this. I've talked to our people internally. I've talked to attorneys that do bankruptcy filings and handle credit repair and whatnot. The mechanics behind the communication between the investor or the servicer and the 3 credit bureaus is arcane, and it is ripe for massive mistakes. And I'm not a gambler, but I would bet that in the next 6 months, we're going to see a massive display of late payments, of derogatories, people posting online because they're being reported late to the bureaus, and their credit scores are dropping by, 100 to 150 points.
Right.
So that's the other, consideration that people need to take into account. Now, again, I go back to empathy for people that need this, and if you can't make your payment, you've got to take advantage of forbearance.
Right.
So I totally get that, but it's important that people understand that if you can make the payment, make it. I mean, you're going to have to pay it eventually.
Right. Okay.
Yeah. So
Okay.
it's an interesting time that we're in right now. That's for sure.
Well, we've never seen anything like this before, so we don't know what to expect. How will we come back from this? And, none of us really have a clue.
We don't. Here's the other thing I wanted to mention. Fannie Mae and Freddie Mac require seasoning of mortgage payments before you can refinance. So let's say you're 3 or 4 years into your mortgage payment and rates have fallen, right? Which they have for conforming loan amounts right now. But let's say 7 months ago, you missed your mortgage payment, right? For whatever reason.
Okay.
You have to wait 5 more months because you now have 7 on-time payments, right? but you have to wait 5 more months because they both Fannie and Freddie require 12 on-time payments history before you can consider refinancing. Okay. Well, what does this look like when 2.5, 3 million people miss their mortgage? And now in 3, 4, 5 months, when the economy is kind of coming back, right? Interest rates are going to stay low, right? And now you want to refinance. That's like 3 million people that can't refinance because they've technically missed their mortgage. Now, does that mean Fannie and Freddie, create an exemption, right?
Yeah.
Right. I don't know. I have no idea what it's going to look like, but that's another issue that's going to have to be addressed.
So are you busy with people calling you for refinances?
Yeah, we are overwhelmingly busy, primarily for loan amounts that are below the conforming maximum of 510,400.
Okay.
That is the nationwide max that the Federal Housing Finance Agency sets on an annual basis that, Freddie and Fannie adhere to provide the call it the best pricing, but it's basically the safest loan because the federal government guarantees those mortgages.
Mhm.
Above 510,400, it's less of a guarantee, and so the mortgage rates are considerably higher for
Yeah.
for those higher loan amounts. So I would say, we probably got 20, 25 loans in the pipeline right now, and maybe 3 of them are over 510,000. They're
Mhm.
most of them are all below.
Okay.
Yeah, and I think I mentioned to you before that for people that have a mortgage balance that's over 510,000, but it's only slightly over, it's like 540 or 535.
Mhm.
There's a way to incorporate a second mortgage called a HELOC, and to have a $510,000 first, and then a little $20,000 second.
Mhm.
Then you get the really low interest rate on the first. So we're doing a lot of those right now.
Good,
Yeah.
good. So if people wanted to contact you, how can they reach you? I can add this in my description, but it's not there right now.
Perfect. Yeah. So my phone number is the number that's going to be printed on the side of my coffin, which is 925 381 8190. That's kind of morbid, I know, but
Yeah,
I
especially
have
right
had it.
now.
Yeah,
Don't think
exactly.
that way.
I've had this number for like 25 years. And then toddgalde.com
Okay,
is good. And yeah, so yeah, I'll text you if you want to put it on the Facebook page.
sure. I've got your information, so I'll add it. So,
Okay.
okay. Well, I think that's about it. A little bit for people to consume here in terms of what's going on and trying to get the real answer instead of what's floating around out there.
Yeah. No, I appreciate this opportunity. Thank you so much for the invite. I think people need to hear this on a recurring basis, like every week, reminded, even if it's the same information, right?
And
So,
like with the real estate rules, and we're essential now, but
right.
the state said we were essential, and then the county said we weren't essential, and then within hours they said we were essential. I mean, it's such a fluid situation
Right.
that we could talk about it next week, and there might be different information. So,
Right.
so anyway, I do appreciate that, Todd, and we'll sign off for now. And you have a great day and a good
Sounds
weekend.
good. Rhonda, thank you so much for the opportunity. I appreciate it.
Okay, you're welcome. Bye bye.
Have a good night.